Hey folks, I hope everybody's having a great day. Welcome to 9 to 5 to Freedom. My name's Alex, and this is our week 5 review of our high yield dividend portfolio. If you're new to this channel, I talk about my career as an electrical engineer, talk about investing in real estate, stock market, and what I'm doing recently is investing in these high yield dividend funds that are paying out dividends that we can live on passively. So glad you can find this channel. Please subscribe if you like this kind of content. Okay, let's hop right into it, folks. So I actually missed a week. I missed last week because it's just been crazy busy, but wanted to get an update of how our portfolio is doing and some of the changes that we had since I posted the last video. So let's see here. Okay, so here we have, this is our portfolio, and for those who are new, initially invested $12,200. I'm investing about $100 every couple of weeks just to build up this portfolio. And these are the high yield dividend funds that I have here. So again, for those who are new, we have a combination of YieldMax, Cornerstone, we got Roundhill, JP Morgan funds, and others. Okay. So let's look at the performance first. We're going to sort by total gain to total loss. Okay, and we're going to see how these have been performing since their inception. Now, I began buying these just beginning of 2025, and as you can see, this is how they're doing. So up top, we got the Cornerstone funds. They're nice and healthy, over 2.5% in total gain on these funds. Now, these funds are great because every time you drip at the NAV, you actually get like a 30% discount when you reinvest your dividends. So this is something that I feel like a lot of people don't know about, but it's a great way to snowball your portfolio. Moving down the list here, we have JPQ. This is from JP Morgan. Up nice 2.3%. We got QDTE from Roundhill, a little bit under 1%. And as we can see, we're moving down the list here, and our performance is dropping. Okay, we're down to in the negatives here. YMAX minus 1.8, Coney negative 3.4, YMAC 3.8, and MSTY whopping almost 11% down, and TSLP almost 14% down. So I just bought this TSLP last week. This is from Curve. I haven't had this fund yet, but I invested $1,000 into it, and it's dropped. This tracks the Tesla stock, and they do options trading on the Tesla stock. So Tesla has had a hit in the recent few weeks, so we can kind of see where that negative impact has been. And this fund is projecting a 51% distribution rate for this year. So this is pretty high anticipation. And if we look up Tesla stock, we can kind of see what the performance has been so far. And it's been a little bit choppy. So it looks like we're up recently 5.7%. But year to date, we see that we had this nice big drop here. And this isn't, this isn't good when you're doing the options trading. Okay, so moving down the list here, and side note on that, I mean, if we do achieve a 50%, even if our portfolio is dropping 20, we're still 30% in the green. So this is more of an experiment. But what happened since I had my last video, again, I took on a leverage, took margin on this account. So again, I'm in $12,200 in, and I took about a 24% margin position. So you get to borrow money, and I'm borrowing at about 11% right now. And as you can see here, here's my margin position here, $3,795. But I'm able to snowball this by using margin. And again, we don't want to have a huge amount of margin. We want to have enough that we can cover our losses, and enough to to speed up our portfolio. Okay, so let's switch over to the dividend view. So if we look at the dividend view, again, this is what we have here. As of right now, we're sitting at $12,520.66. Projected dividend payout for this year is $5,065. Okay, let's do some quick math here. So our margin is at $3,795. And like I said, we're borrowing that at 11%. So $3,795 times 11. So that's $417 that we're going to pay in interest this year. So we'll set that number aside. And then we're going to look at what our expected return is, which is 5,065. So 5,065 minus 417, 4648 is what we're going to pay, is what we're going to get paid out in dividends if we subtract the margin that we're carrying. Now, if we divide that by initial investment of 12,200, that's a 38% ROI, which is phenomenal, right, folks? Okay, so again, we'll see how this performs. This is week 5. We're mid-February here, and market's been doing really well. But overall, our balance is 520. Okay, so if we do some just rough math on that, so 12,520 minus 12,200 initial investment, we're up $320. If we divide that by the initial investment, we are up 2.6% year to date. Okay. Now, if we take that and let's say we divide that by 3, because we're about 1.5 months into the year, so that's a 0.87%. And if we do that by 2, then our monthly gain is at 1.7%. So 1.7, and let's say we're going to speak hypothetically. Let's say we're able to achieve this on a monthly basis. That looks like a 20.4% return on investment at the end of the year. So again, this is if the market continues to go up and we're frothy. So we're being optimistic, we're being bullish. But today I got another payout of $78. So some more money there received, which is great. And yeah, overall, I think we're on the right track. I'm liking this performance. Last week we had a little bit of a dip. I was a little bit disappointed about that, but I think some of the lessons learned this week and last week is I think when I go long term, if I'm going to have a large position, I'm not going to have these individual funds. I didn't do good with MSTY, TSLP, and if I look at, okay, well, what does this represent in my portfolio right now? Well, that's 8.5% right there. And I don't want to be singly invested. And I'm looking here, I got Coney as well. So that's another 1%, 1.2 there. So really I'm risking about 10% with these single ETFs, single stock ETFs. So not too happy about my balance here. And I think if I have a large account, let's say of $100,000 or $200,000, I wouldn't want to risk 10% of that on these single stock ETFs. So I think ideally I want to build a portfolio that's 95% spread out across either the market or concentrated market like S&P 500, and the rest of it, I can a little bit gamble and be willing to lose that 5% with opportunity to make more. So that's just my thoughts for this week, and I think so far this experiment is going pretty good. I don't have any regrets yet, and like I mentioned in my previous videos, I'm in the process of selling one of my rentals, and with doing that, I'm looking to dump more money into this account to see if we can snowball it a little bit faster. and see how it works out. And ideally, I mean, we want to build something that can replace our 9 to 5, and that's the whole point of this channel. We're documenting how we're going to build this portfolio to pay all of our bills and live financially free. So glad you found this video, glad you were able to watch it. If you like it, please give me a thumbs up, subscribe if you haven't yet, and we'll see you on the next one. See you, folks.